Okay, hi to everybody who are joining us. I've just let you all into our session this afternoon. I see the attendee numbers are going up, so I'll just give it a minute to let you all join us, and then we'll kick off with our webinar. Got some great people coming in there. Hi everybody who's just joining us. I think we've got people from across the drinks trade and also some people who from Simon's industry, the advertising industry, the IPA, and obviously we've got Peter from Facebook as well. Okay, so I'm going to kick off. Hi everybody, welcome to our Investing for the Future webinar. When we started to think about this session, what should we call it? Investing for the future, investing in the future, and we decided on investing for the future because the reality is that businesses are having to make tough decisions now and over the coming weeks that will have a huge impact on their short-term and future growth. So it does look like we're entering a bit of a crunch point for the industry. Eat Out to Help Out was hugely successful. I think a third of Brits all took advantage of the scheme, and of around the 40% of customers that did, that was their first time going back into the on-trade. But we also know that consumer confidence is very fragile and quite strangely polarised at the moment as well. So that'll be interesting now that the Eat Out to Help Out's come to an end. We've also got the end of the rent moratorium that's coming to an end this month, and we've got the job retention scheme which is being phased out and then completely ended in October. But it's not all doom and gloom because we've got a fantastic panel with us here today who are going to talk through exactly how, where to invest, and going to guide us through all of these issues and tell us how to future-proof business for short-term and long-term growth. So before I introduce our panel, just a little bit of housekeeping. I just want to make sure that everybody can hear us. I'm hoping that I've got a hi from someone on the chat, but if you can't hear us for whatever reason, or if the view isn't changing, please let us know, but I'm hoping that everybody can hear us okay. And also we're going to be taking Q&As throughout the session. All good, thank you, Karen. We're going to answer questions as we go and at the end as well. But if you can please submit questions to us by the Q&A function, and we will be keeping an eye on that. Okay, so I'm going to introduce you to our panel. First up, we've got Simon Fraser, Senior Research and Marketing Manager at the IPA. IPA has nothing to do with beer. It's the Institute of Practitioners with Advertising, and they're an industry trade body for the advertising industry, represents the interests of the media and creative agencies. They also produce annual Touchpoints consumer study, which looks at shifting consumer behaviour patterns. Then we have Peter Buckley, Connection Planner for Northern Europe for Facebook. I think Peter has won every advertising award out there, I think, Pete. He obviously works extremely closely with clients across Facebook and Instagram and their platforms, assisting with insights and intelligence, helping to drive brand growth. We have Troy Christensen, CEO of Inotria & Co. Inotria & Co is one of the biggest and leading suppliers, specialist wine and spirit suppliers. Has a really sought after premium and innovative portfolio. We have Nikki Forrest, MD of Phipps Relations, food and drinks communications agency in London, major accounts with Wines of Germany, Wines of Rioja, and many others. And last but not least, we've got Nick Darlington, Director of Graph Vine, which is an amalgamation of the Knotted Vine and Red Squirrel, two fantastic portfolios that came together last year. So we've got quite a diverse panel here, so I thought we'd start quite generally. Simon, if we could go to you first, can we just ask you a little bit more generally about what you've seen happen this year in terms of businesses responding to the economic stress during lockdown, but also coming out of lockdown as well?
Yeah, well, one of the key things that we have seen, and we always seem to see whenever there's any period of kind of economic downturn, or any kind of tumultuous trading circumstances, is that budgets immediately are being cut across the board. Now, part of the reason, and I know part of the motivation from the perspective of the FD, is that the kind of expenditure is seen as purchasing rather than actually investment. So what happens a lot of the time, and we have been seeing, is that where brands are cutting back on their marketing and advertising investment. They're perhaps cutting down on kind of what they deem at that circumstance to be non-essential staffing. It's actually really cutting down on their abilities to invest or to grow going forward. So investing, or kind of looking at this, is really in a way a critique of the short-term strategies that are sometimes that are sometimes existing at the moment, of let's quickly save as much money as we can, or let's cut back on the things that are easiest to actually reduce. But often we're really missing out on the longer term impact of that. One of the things, it's kind of like, if you think of it in terms of an analogy, if you will, of thinking of, say, for example, a ship in difficult seas. The first thing they'll dump is always the cargo. Now, but what we have to really be thinking about is when we actually arrive to port at the other side of the tumultuous circumstance, when you get there, you haven't got any cargo to actually give to anyone. So you're in a circumstance where if you're not investing now, or if you're cutting back on those essentials, people won't know what your brand is. They won't build that brand loyalty. They won't be aware of products that you're doing, and they're going to really be cutting back. So I think that's a particularly difficult circumstance that we have seen.
And have you seen companies, agencies doing that, cutting back on their spend? Has that been to their detriment?
Well, it's difficult to say whether it's to their detriment at this particular moment in time, because obviously if we're thinking about this, it's about a long-term, you'd have to look at it in more of a long-term analysis. But we do know from previous periods of recession, from the IPA data bank and the extensive amount of case studies that we have, brands that cut back in recession are always the ones that find it hardest to recover afterwards. So we are expecting that to be a particularly problematic thing going forward. Mm-hmm. And as well, I mean, the thing that we're particularly focused on at the minute is, from our touch points research that we do, we know that people are really considering their purchases a lot more. They're considering what they're spending. They're actually engaging a lot more. They're having more free time to engage with perhaps environmental issues, corporate social responsibility issues. And if brands aren't aware of these things, or if brands aren't there at that moment of consideration, if that marketing advertising spend's been cut, recovering is going to be very, very difficult. And just to give, I mean, Golden Wonder was once the largest crisp brand in the country, and then at a point in the late 80s, early 90s, when they started to really cut their advertising and marketing spend, now people kind of remember Golden Wonder as that was a brand from my childhood. They don't remember it ever as a market leader. So it's really important, I think, for brands to be considering that.
Mm-hmm. You mentioned environmental sustainability, so we'll come back to that as well. But Pete, I wonder if you could pick up on that. Obviously, we talk about share of voice and the importance of maintaining share of voice and consistency and keeping that engagement. So what have you seen? Because let's not forget that behaviours during lockdown was a particular set of behaviours, and now we're coming out of that. So what have you seen? What's the evolution been in terms of how companies are responding across your platforms?
As Simon says, basically we've seen significant cuts in a lot of advertising budgets on the platform. I speak from a perspective of Facebook and Instagram, but we're seeing it start to come back at all different levels, from the largest advertisers all the way down to the smallest advertisers. What we saw over the lockdown period was a significant increase in people spending time on messaging and social platforms, but we saw a decrease in the investment, and therefore the platform's an auction, so therefore it became a lot cheaper to buy advertising. We're seeing that accelerated usage sort of level off now as we come out of lockdown and life starts to go back to some sort of normal. And there is a slight increase, as I said, in advertising spend on the platform. But actually what's happened is people are using the platform in different ways. So we're seeing a lot more live usage. So that's where people go live on Facebook or Instagram. So actually do a live video for whatever reason. That's really taken off and is seeing significant sustained growth, and longer videos on Facebook as well. It's seeing some real growth as well that's sustained over time. So it appears that the lockdown has changed how people use our platforms. What's not happened yet is maybe advertisers haven't caught up on that. So the use of those types of platforms are probably lagging a little bit from the perspective of advertising. What we find often is that's the case. Consumers will change their behavior in some way, and then advertisers sort of catch up slowly over time. But we have, from an advertiser perspective, definitely a lot more, and I guess this is to Simon's point, when you buy on the platform, you can buy sort of brand objectives or direct objectives that get a short-term response, i.e. a sale or a lead or a website visit, a lot more investment into the short term, as you can imagine, as businesses need results now rather than thinking in the long term.
Yeah, absolutely. Well, I think we'll talk a little bit more about messaging and the importance of consistency, but also how that messaging's changed in a little bit. But maybe if we could come to the suppliers on the panel. So Nick, could you maybe sort of field that same question around investment? What's your priority been this year? Has it indeed been pivoting your communication approach? Because I know obviously both Inotria and Graft have been pivoting. We hear that word a lot, but how has that worked for you this year?
Use the word pivoting. Probably outwardly it looks a bit like that, but I mean, compared to maybe some competitors, we went into lockdown as deliberately a multi-channel business to greater or lesser extent, and so we didn't really have to pivot. What we understand by that is completely change what we were doing from one direction to another. We were able to turn certain aspects of the business on and off, or louder and quieter as necessary. So we always had a bit of an online retail presence. That didn't go crazy, but it certainly increased a lot in the process of going into lockdown, and it's leveled off a lot as the trade has reopened. So we've been able to turn our attention back to other sides of the business. So we didn't necessarily have to reinvent the wheel. I know that other competitors, smaller and bigger, literally overnight or over a period of a fortnight, had to create a load of e-commerce channels. And we had something ready to go in that sense, which was useful. We've definitely, over the past 6 months, and wasn't a deliberate strategy going to the year at all, we've definitely increased our online marketing spend, both in terms of just pure advertising and in terms of resources that we would devote towards online presence, online voice, digital resources. And that, again, is just out of necessity. We haven't been able to do what we would usually do, which is go out and sort of marketing resources physically and host events or travel around and things. So we're in an unusual period where, yes, there's been a renewed attention investment from our part on the online channels. However, it's self-enforced by the situation that we're in at the moment. So I don't know where that will take us. It kind of depends how the pandemic plays out and what sticks, because a lot of things we're doing now may not stick. I mean, if you remember going back into lockdown, Troy will probably remember discussing this as well in the last webinar we did with Andrew, which is that there was a massive flinging into online tastings and Instagram and Facebook and things. All doing that. Mm-hmm. Happening. The wheat was sort of in the chaff very quickly throughout lockdown, and it's the people who did that really well that are still doing that, still investing in it, and actually getting real returns on it. I think that people who realized it wasn't really for them, or didn't, they quickly dumped it. Mm-hmm. Things that stick and things that don't, and it won't be the same for every business.
But I suppose one of the things, and what we talked about in the last webinar, which was harnessing the crisis for change, was about how to take positive change forward. And I think a time has gone by a little bit since then. But what we've seen is that things are still changing, and there's still new behaviours are still being formed, like the Eat Out to Help Out. I think 80% or something said that they wanted to try a new restaurant with the scheme. So I'm not saying that's blanket across the board, but there are new behaviours being formed. So what can you take advantage of this? Maybe Troy, could you answer that? What are you doing to take advantage of those shifting behaviour, consumption behaviour patterns?
Yeah, I mean, there's been some interesting dynamics that have happened, as you noted. I think people sitting at home over-indexed in wine and in premium wine. Like Nick said, we have a digital platform as well. We did see a bit of hyper growth. And there was a bit of a dichotomy. We had some sales on, and some people certainly took advantage of that. We also took the opportunity to try to get rid of some long stocks, and people were more than happy to buy at that price value level. But there was a lot of premium purchasing, and I think a little bit of data that showed that. Also, Google Analytics talked about how the younger consumer historically has had this online presence and trend, and that's been natural. But during the pandemic period, people from 33 plus have seen such an exponential engagement in the digital marketplace that suddenly they become a very viable consumer base and marketing to them via web analytics. And I'm sure Simon Peter would have a much better level of statistics, but I think you are seeing suddenly a lot of people that are engaging in this category that didn't before. You used to go into the digital platforms and Instagram and doing the kinds of tastings that Nick was talking about, largely on the back of, going after the younger millennials. Now it is everybody there because people sat home for 4 months, and if they couldn't figure it out before in their life, they had plenty of time to do it. And so I think the people that are now going to be exposed across the board in all ages and sociodemographics through online is going to be very important. I think you're also seeing a lot of shifting. We've talked about this, people working from home. I think the statistics that 60% of the people working from home now, 50% of those have never worked from home before. Of those, 80% of them went out for a drink at least once in a city center. 50% of them went out for a drink 3 times in a city center. So I don't think there's going to be a shift in where people are consuming, but I do think how and where is going to be a big change. And so I think you are getting a lot of people that are trying to figure out how to go where the consumers are going to be. I don't think there's going to be a quick migration back to the city whatsoever. We're also seeing a strange, there was a big mix towards cocktails that we saw immediately after lockdown, and at premium cocktails. So I think people were home for a while. Maybe they drank beer outside when it was nice and warm, but they sat at home and drank a lot of wine. And so then when they came out, they really wanted a premium cocktail. So there was a lot of shift in how consumers sort of engaged in the on-trade versus at home. And I do think understanding and getting the data from the consumers and accessing, the digital platforms and trying to engage with your entire consumer base in a very different way is something that all of us on the supply side are going to try to figure out quite quickly.
So Nikki, can we get your sort of thoughts on that? Obviously, I think you were telling me earlier, obviously, about how you've been pivoting and your FIPS relations now, not PR, because you've got a more diversified business where you're doing events and things and a lot of move to social. So how has that, and that was before the lockdown, if I'm right. So how has that evolved, and what are you doing with clients now?
Yeah, so 2 years ago, we actually changed from FIPS PR to FIPS Relations because we worked out that we weren't a PR agency anymore, and we hadn't been for a long time, because for our bigger generic clients, we handle everything for them, from all their events, all their promotions, on-trade, off-trade promotions. We do all their digital platforms, social media, influencer marketing, and we do the PR. So we shifted a while back, which is probably a very good thing. And I think flexibility has become the new norm for campaigns now. So we've seen everything from our clients. Some clients have dramatically reduced their budgets. Some have reduced them slightly. Some have even increased slightly. Some have just stayed the same. So we've kind of seen everything there. But what we've had to do with the campaigns that we are running for clients is obviously all of the events went out the window. We were at Wilderness and Latitude doing campaigns and promotions there. That had to change. And one of the things that we've done is looked at the COVID landscape and worked out how can we help the landscape and how can we help our clients more. And I guess that plays into the corporate social responsibility side a little bit that we'll talk about later. But one of the big things that we did was Latitude, the festival was cancelled, so we had a pile of money for Wines of Germany, and we decided to run some retail promotions effectively with smaller independent companies, and that campaign was launched 2 weeks ago. It's called the Retail Partnership Fund, and the idea is that, you know, we spend, you know, larger amounts of money with the big supermarkets and bigger online retailers, but what about the smaller guys who really need our help? You know, what can we do for them to help them sell more German wine? So of course there's something in it for Wines of Germany too, but how can we help them you know, sort of find their feet, sell more wine, you know, make some more money, and introduce, you know, a whole new group of customers to German wines from our side. But I would say that flexibility is very much the key thing.
Absolutely, because you mentioned about smaller businesses, and obviously a lot of people who will be listening in today will be independent merchants or have a standalone restaurant. And Pete, I know you were saying to me earlier about how the platforms are used, and I think in the wine industry there's still this kind of, even within the industry, this romanticized idea of the lone winemaker, and this year is kind of, in a way, it's been the last sort of, not a nail in the coffin to that, but we've become an industry that's gone online. We've had online tastings. It's opened up that conversation between the consumer and producers via online. So how would you say to the wine industry, how could they use the platform like Facebook to reach consumers for small businesses, say?
I think on the platform, the most effective way to use it is to understand the outcome that you want. Nick mentioned it earlier about, you know, some things work for some brands and companies, some don't for others. So what we always try and encourage any advertiser on the platform is get as close to the outcome you want as possible when you're setting up your campaign. So for example, instead of saying, okay, I'm going to run this campaign and get lots of clicks to my website, if you want people to actually buy certain products, then optimize to the product sale, not to the website view. It sounds quite basic, but it's something that often new advertisers and small advertisers struggle with. The way the machine learning works on the platform is you give it one instruction to do something, and then that's all it does. So the closer you can get to that sale outcome or whatever it is that you want, and make sure that the platform understands what you want and it goes out to get it, the better it is for the advertiser. And that's a bit of a different way of thinking about it. So back in the day with advertising and media, it's like, okay, I'm going to target this segment. These types of people like wine. I'm going to find these people. I'm going to go in a wine magazine, or I'm going to, you know, do a mail shot to these people who are on this database that like wine. That's not the approach to use on these sort of platforms, because the way they work basically is the wider you can give the machine learning to find, or the ad delivery system as we call it, to find people who potentially will convert, the better it is for your advertising spend. But what happens is small advertisers think, you know, I've got the ability to target just people who like wine. That's what I'll do. I'll just target people like wine. It makes sense. And maybe even this type of wine. But that just basically limits the number of people that the ad delivery system can look at to get you that conversion. And obviously our interest targeting isn't exact, maybe. So the wider you can give the audience and then use the signals that it finds from your activity, the better it is, if that makes sense. I know it's just a very different way of thinking about how you spend your marketing spend. Instead of getting a tight target audience and sending my messages just to them, a wide audience, and then the feedback loop from the signals will determine exactly who in that audience is going to respond and who isn't. So you're kind of optimizing your activity, not off presumed interest, but more off, well, what do they actually do, if that makes sense? And it will convert, it'll optimize to those who are most likely to convert. But that's a big shift in how people think about marketing investment.
A big shift. And you said that most of your clients actually on Facebook are smaller companies. That's the lion's share of the advertisers? Massively,
yeah. So 9 million advertisers, and I think it's over 80% are smaller companies. So most of the investment on the platforms is from small local, you know, Pilates teachers or whatever it may be, this type of thing, rather than your Cokes and your, although they do invest, but no, it's more that type of advertising.
So we know the importance of consistency, because obviously as soon as you take a step out, you're leaving the the way clear for somebody to take the share of voice, and also it means that you have to build that presence up again because it's machine learning, right? So it becomes more intuitive. The algorithms that you use, the more consistent you are. Simon, I know you have a comment to make on that as well, but I also wonder about the consistency of advertising is important, but then messaging as well. Messaging has changed during lockdown and as we come out of lockdown. Could you comment on that, Simon?
Yeah, sure. So what we've seen, particularly in the early days of the lockdown, and again, we don't want to use the word, like necessarily the word pivot, but we see a kind of a real shift towards what's seen as kind of CSR, corporate social responsibility attitudes within advertising. So you are seeing a lot of movement towards COVID-related advertising. So I've seen quite a lot of studies in recent times that have really shown a level of fatigue to that sort of brand messaging. So companies that were immediately kind of communicating in relation to COVID and in relation to the current situation, actually what consumers were largely wanting was they engage with that brand. They like the particular brands they like because they give them an element of escapism of the real world. They buy particular drinks brands because it says something about them and it makes them feel a certain way. So just being kind of reminded of the negativity of the current situation often it seemed to be putting people off a little bit.
Mm-hmm. Mm-hmm.
So yeah, that's a particular consideration, I would say.
Because there's also been a shift from less experienced messaging more towards safety. But I wonder how that will evolve, because we've got a bit of a sort of strange fragmented situation going on where I think people that have been out since lockdown, they are those who have been out to the eating and drinking out, and those who haven't, both equally index quite high in lack of confidence in going back out, and also in a second lockdown, and also quite polarized in terms of financial how well off people are. People seem to be more say they have been more impacted by COVID compared to the 2008 crash, but then also they're saying that I've been less impacted. More people are saying they've been less impacted as well. So it's a strange, complicated picture that we're dealing with here. So I don't know who wants to, Troy or Nick, do you want to pick up on that?
Well, I could take a first crack, Nick, and then you can follow if you don't mind. Consumer confidence is a huge issue. Even if you haven't been impacted, you certainly have seen a lot of concern about the consumer confidence. Interestingly, of the people that have that use the on-trade weekly, about 25% of them are either still on furlough or have been made redundant. So I do think you are going to see continued pressure on that consumer confidence. But also in the UK, from a shopping perspective, both Google Analytics as well as Kantner have illustrated that Brits were more apt to go to the branded product as opposed to private label that you saw in other areas. And we've seen a little bit of that within our on-trade business, where historically there was a lot of experimentation, and the weirder, wackier, wilder wines were what people wanted to come in with, the indigenous varieties and a lot of the trends. And as the initial restaurateurs are opening, they're coming in with a more narrow list. And they're going back to the old favorites, the New Zealand Sauvignon Blancs and the Malbec. So I do think that there is going to be this initial run to safety, to what you know, to brands. And it's an opportunity for people to either engage, but it's a risk point for people that were sort of migrating down this little bit of a different path to sort of, get the consumer comfortable enough with getting some of that money out of their pocket to try something that might be a little bit different and they don't know about. So you're right. I do think we are in a very different time, and it's both opportunity and risk. And it's really up to the suppliers to figure out how to make it work.
Mm-hmm. And how are you making it work, Nick?
And to a great extent, it's not really us to make it work. It's the on-trade operators who are making it work to mostly greater extents. It's our place to make sure that we're ready to help them make it. What's the right advice, but also being eyes and ears. I mean, we operate across different channels, whether it's on-trade, off-trade, different types of on-trade operators. and across all regions of the country. So we're able to give insight and best practice to our clients, what's happening, not just down the road, the other side of the country. And we're seeing incredibly different responses in different parts of the country as well. If you compare the
Sorry, Nick, we're losing
destination
you.
hotel restaurant that we work with in the corner.
Sorry, Nick, I think we've lost you there. Hey, could you just repeat that last sentence, if you could?
The thing flicking up saying internet connection was unhappy. Hopefully it's cheering up. But the response we're seeing from clients across the UK is very different. If you compare someone last 2 months on the North Cornish coast, and last 2 months in the centre of Manchester, answers how they are acting, but also how consumer confidence is. And I think that at the moment we're in a good phase where a lot of people, whether it's Eat Out to Help Out or just general improvements in confidence, for the first time since lockdown. Myself being one of them. I mean, I went to a restaurant in central London last week, and it's the first time I've been to a restaurant, but it's the first time I've been right into central London to go to a restaurant. And it was fantastic. It was a very professional, very slick operation. But it's also one of the best known restaurants in the area, and indeed London. Mm-hmm. But you walk past a lot of mid-tier, middling restaurants without that reputation, they're all empty.
Yeah.
Troy said people are going to, if it's a brand, maybe, a big chain brand that they know and trust, or it's a restaurant with a great reputation. It doesn't have to be high end. It could be mid-market or, cheap and cheerful. But somewhere that's always been popular is a bit better at the moment. The long
Sorry, Nick, I think it's unhappy again. Nick, did you want to try going out and coming joining us again?
The point really, which is at the moment it's good. We just hope that continues a bit.
Okay. So sorry, Nick, we lost you a little bit there. Oh, he's gone. Okay. So I wonder, Nikki, Simon, and Peter, this idea that, maybe a one-size-fits-all approach isn't working at the moment because you've got people who are treating themselves and you've got people who are drawn to brands and consistency. Simon, could you maybe just talk us through that a little bit? What sort of strategies should be put in place?
Well, I think one of the things that works particularly well is really understanding the motivations for consumers and why they're making the purchases and the decisions that they are. Because there is, in terms of broadly marketing, what we're talking about, ultimately we want people to purchase more of the product. But that's kind of not just the only end goal. You want them to actually return, buy more product as well. So I think there's a variety of different approaches in terms of people who are perhaps a little bit more financially stretched. There's actually opportunities for some of the cheaper price brands to actually up their communications towards those sort of people and pick up where other brands perhaps are a little bit too expensive for them. For those that are still in the kind of the ostentation sphere, still looking to spend and really want those premium experiences that they're not able to get, or they weren't able to get in the restaurants during the lockdown, where they really want those fine quality products, then it's a great opportunity for actually marketing directly within the home. And I think another thing, an important thing to say is that brands that have the ability to, well, the brands that are agile in these sorts of circumstances are the ones that seem to be doing really, really well. Because I know there was an example recently of Lindt, who had no online presence at all, and I know that within kind of, I think it was about 4 or 5 days, or maybe even less than that, they went to a full-scale online shop promoted through Facebook on Shopify, and were able to really address a direct need from the consumers under that circumstance. So I think there's no, I don't think that there's definitely not a one size fits all in terms of actually kind of communicating to consumers. It's really about tailoring things to the motivations of them, and I think also just splitting as well, in terms of splitting in marketing investment away from just direct activational sales, away from just going, right, we need people to just buy the product. That's great for certain elements, for certain products that you're looking at. If you want to build that and retain that customer and to continue them coming back, they're going to remember the brands that they bought during the lockdown. You know, they're going to remember those brands, and they're going to be thinking carefully about them going forward. So I think there's a really good opportunity. But what I would say is from the previous research we've done on recession periods, and from the IPA's data bank and the case studies we have, like that split of 60% activational for 60% brand building spend to 40% activational spend. So really focusing on, even for smaller companies, smaller private organizations, focusing on making people aware of your brand and making people aware of what you stand for is actually one of the most important parts before you actually push through with an activational sale, because you're much more likely to buy from someone that you know, that you trust, that you believe in the ethos of, that you engage with. So I think that's a really important thing. Focusing on that long-term brand building is still, I think it's more vital than ever during times of difficulty.
Mm-hmm. Peter, you're nodding along to that. But I wonder if also you could comment on that, and also about what kind of messaging is working on Facebook, and if there's anything sort of alcohol specific you could share with us.
Just to reiterate what Simon said, definitely important to think about the long-term brand growth. But to go back to what Simon said about Lint, what we've been finding on our platform is there's obviously, because of the lockdown, we went through a lot of retailers or brands who have never sold online have come online for the first time, and we've been helping quite a few of them, as of many other companies. What we found is that what really helps, even those who haven't got an e-commerce can start to sell online through partners. So what we allow advertisers to do now is something called collaborative ads, where even if you don't have an e-commerce presence, you can basically optimize your sales off a retailer, some other retailer's website. So you don't need an e-commerce setup for you to optimize, because the problem used to be in the past where I'm a brand who doesn't have an e-commerce presence. Any advertising I run, then I'm limited to optimizing against clicks or views. Now that doesn't really mean anything. Like a click to my website, so what? Someone visited my website, a big deal. So what we've tried to do is connect e-commerce retailers to brands that don't have an e-commerce presence, so they can basically optimize off the retailer's website, and that's allowing a lot more brands to become e-commerce ready. From a messaging perspective, like was said earlier by Nick and yourself, it's really become very split. There's some great research recently, I think it was by Kantar, that showed half of people would like brands to talk about COVID and what they're doing and how they're helping people, and the other half would hate it. So the country is very, very split. And I think it goes back to what I was talking about earlier, is on our platform, the way in the past you used to have to make that decision. Okay, I'm going to do an ad that's going to say this, or going to be for that product, and that's what I'm going to do. I'm going to put it into X media. Now what we're finding is brands are making multiple ads and then throwing them out there and seeing which one works, and the ad delivery system will optimize to the one that's getting the best results. And it's a completely different way of working with media and with messaging, because in the past you had to decide what your messaging is. Now you can use this as a sort of test bed to understand in real life what are people responding to, whether that be how long they watch a video for, or whether they actually buy a product, whatever you want it to be, and then optimize to that message. Because it's very hard at the moment, harder than ever, to say, okay, this person is like that and therefore will like this message, and we'll target that person with this message because that's the type of people they are. It's getting more confusing because of lockdown, etc. So we're finding that that's the approach that a lot of advertisers are taking: multiple messages and then putting it out and seeing which one works most effectively.
Nikki, can you pick up on that?
Yeah, I think it's really important to remember that, you know, whatever situation we're in right now, the basic marketing rules, I don't think, have changed. And that is, you need to work out what your objectives are. You need to know who you're talking to, who your audience is. You need to work out what your messages are. And what Peter was just saying there was very interesting about how you can test your messaging, but work out what your messages are. And then you decide your tactics and your channels. But I think what has changed is that we as marketers need to listen more and react more quickly. And that's definitely, it's always been the case, but it's been dialed up massively now. You've got to listen and react more quickly. And I think going back to what we were talking about earlier about consistency, it's absolutely key. And you can have consistency of messaging, but you also need consistency of communication. And the problem we talked about right at the start about marketing budgets being cut. And for me, a marketeer never cuts his own budget or her own budget. That never happens. It's always the CEO and the CFO and the board. And if you don't have a supportive board who believe in marketing, I know some boards think that the marketeers are the fluffs that, you know, do things. They're not quite sure what. And let's not get into that. But if you don't have a supportive board, you know, you're going to cut the marketing budget because it's a big number. It's always a big number. Well, hopefully it's always a big number in your P&L. And, you know, staff's a big number and marketing's a big number. And when there's fear in the air, it's easy to dial down that marketing budget, tell yourself it's just temporary, and by then the damage is done. So that consistency of communication is really important. And we talk about share of voice and share of market, and they're two different things. It's always better to have a higher share of voice than your share of market, always. And in theory, if others are cutting their budgets, it should actually be easier and cheaper to achieve a good share of voice. The marketer who reduces his spend makes it easier for other marketers to maintain or increase their share of voice during the same time. And I think you have, as a business and as a leader, you have to be able to balance the, you know, the short-term profitability or lack of profitability versus the long-term gain. So you do have a trade-off there. But consistency of messaging, yes, but also consistency of communication is absolutely vital. And there are so many reports and surveys that show, I mean, McKinsey did quite a famous market research survey back in 2002, and it tracked over 1,000 American companies over an 18-year period from 82 to 99. And that included the US recession of 90 to 91. And they found that while most companies cut marketing spends, the winners were the ones who actually decided to keep the marketing spend going or even spend a little bit more. And the losers, every single one of them, were the ones who cut their marketing spend. And actually, during a recession, the study also found that the winners spent more money as a percentage of sales on marketing during the recession, and then they spent less during periods of growth. So, you know, this whole conversation about cutting marketing budgets, to me, goes right back to that core thing of consistency. If you are consistent with your communication and your messaging, that is how you'll build emotional engagement and brand loyalty in the long term. And that is probably the most key thing, I think, that brands and companies are facing now. Your consumers or your customers might be dormant now. They might not be there, but if you keep going, when they're ready and you've been talking to them this whole time, they'll come back to you. And I think that that's really, really important right now.
Mm-hmm. We've still got to get through staff, investment in staff and the furlough scheme, and also environmental initiatives. So I actually have one quick question that's related to marketing and PR spend. So I'm going to throw it out there to the panel if anybody wants to put their hand up. From Pippa Carter, how have clients behaved between retail and trade promotional spend versus direct brand building and customer spend? So between retail and trade promotions versus direct brand building and customer spend. Does anybody want to pick that one up?
Well, I can address it from our standpoint. It's difficult because there was such a big upswing in the retail environment. We do both off trade and through the retail side, so it was sort of hard to capture what was there. And people were very they might trade down and they would like to go for a promotion activity, but again, that doesn't really build your brand very much. but a lot of people didn't have to discount. So pricing in total across the UK market is up, and it isn't that people were increasing prices. They just stopped the death of their promotional activity. So I do think that there was a very narrow period that no matter what you did, and again, we did on our digital platform investment in Facebook and Instagram, and you got this ridiculous return profile because it was just such an open opportunity. So I think it was a very unique period where you didn't have to discount very much. And by bringing your product in front of a customer from a B2C standpoint, the branding itself was very significant. So our platform on the digital side has 100% more customers on a regular basis now, and it was very little in investment to get there. So I would say that was certainly the bigger win for us.
Mm-hmm. Okay, great. Right, I'm going to flip quickly, if you don't mind, to environmental sustainability, because obviously we know that before lockdown happened, the wine industry was kind of establishing itself as something of a leader in environmental concerns. There was the Porto Protocol Initiative with Taylor's Port that put a real spotlight on that. And you would think or hope that there was a certain amount of introspection that was going on. But faced with a deepening global recession and a global pandemic, what's the economic imperative behind environmental sustainability initiatives, and what is the consumer appetite for it now? Do you think it's deepened consumer appetite for things that are brands that are more environmentally and socially aware, or do you think price will drive that down? Who would like to pick that one up? Nick, are you nodding along there, or?
I mean, and by saying that, I was actually research that I did whilst at university. So I know this is true, that all the research shows that over the last 40 years, whenever there's been a recession or some sort of economic downturn, particularly if it's been felt globally, interest in environmentalism, both on behalf of consumers and has dwindled. Correlate it almost to second, that as soon as people feel less wealthy, they care less about the environment. I think that actually we are going to get to a point where that sequence is broken. Although there are going to be economic trials ahead, I think we are still going to see environmental awareness and concern increase. And I think so twofold. One, environmentalism is connected to social awareness. So people are more socially aware about their fellow citizens. And I think that is connected to being more socially aware about the environment and that they're in. Realizing there's a lot of things they used to do which were not good for the environment, like commuting or holidays. And although people miss those, I impacted them more now they're not here. Because although we've been filled with all this dire news of COVID-19 over the last few months around the world, we're also being fed news about how the air quality is better, about how wildlife has returned, about how life is at cleaner. Because lots of traffic and you haven't got lots of airplanes, and people now talk about, oh gosh, it's all a bit more out there, isn't it? There's more cars, there's more trucks and things. So I think that environmental awareness is going hand in hand. And so the brands that do put that front and center of what they are about, I think stand to win. Things going at a sort of macro level.
Sorry, Nick. I think macro is the last thing we heard. But yeah, I think you're absolutely right in that there has been, in times of economic stress, that people wind in their spending. But this is a different type of recession that we're seeing. We've never had a moment like this where people are off the roads or were off the roads in the way they were. Nikki, did you want to say something on this?
Yeah, I think COVID has been a sharpener, if you like, and it showed us what a global catastrophe can look like. And in some ways, you could say it's become a dry run for the sustainability agenda in a wider scale. Nick made a really interesting point about environmentalism is linked to social awareness, and I think he's absolutely right. if you think about the crisis that we've been through and that we're living through, it's made communities closer. It's made people more aware of the need to act collectively, I think. For things that we've all done as citizens, we're wearing face masks. That's a collective action. We're donating to food banks. We've probably done some shopping or helped out a neighbour. And those are all things that have brought us closer together. And then you look on the corporate side of things as well. And there's been a massive influx, even in our industry, of donations to the Drinks Trust on a corporate level. It's been incredible, and raising money for Beirut. So even in a disaster, we have it within us as citizens and also as corporate citizens to do the right thing. And I think that we're more aware than ever of the need to become those people, both in our private lives and also in our corporate and working life. And I think the COVID crisis has shown that we can make drastic change and we can make it quickly. Could that also then demonstrate that when it comes to what I think is the biggest crisis we're facing, which is climate change, could we collectively, globally work towards that? And I think that this crisis has been so deep and so global that the reactions now will be different. All of us as well are consumers. And I always say that it's really important. We get so caught up in our world as being marketers and drinks industry experts or whatever we are, but we're actually consumers, not just of wine and drinks, but of everything. And I think if we believe in our private lives that, we can work collectively, and for the social good, then actually we can do it in our corporate lives too, and we are. And my hunch is that brands and businesses who do the right thing are the ones that will resonate with consumers now and even more so in the future.
Yeah, well, I mean, look at Brewdog. They just put 30 million into their climate crisis initiative, and it's there's no one more sort of trendy and on the pulse than those guys. Troy, anything to say on the sustainability?
I would agree. I think it sort of takes a bit of a break when people are happy to put more detergent all over themselves to get rid of every bit of germ, and we got rid of the reusable bags in a short period of time. But when you statistically look at everyone, and I think it goes beyond just sustainability. I think there is a wellness aspect of it as well, a kindness aspect. So when consumers are looking out there, it's not just about the environmental aspects of a product, it is a wellness, and you're seeing trends certainly now coming on the back end, and we saw it through our digital platform during lockdown. The no alcohol beers were flying. We couldn't keep them in stock. And so I think there is an aspect beyond just sustainability that consumers are interested in, and brands need to look and segment how to go to each and every one of those aspects. We've been doing a little bit more with kombucha, which is a giant category in the States. We've been looking at some CBD, which is a giant category in the States, and not done from a stoner aspect of it, but a wellness aspect of it. And I think those are the kinds of things that we're seeing and hearing from our customers: natural wines, biodynamic wines. It is that kind of thing that is engaging the consumer. So not just the sustainability, which I agree is there. I think there's a broader platform that each supplier needs to segment and find a solution for the consumer, because there's a real need on a whole host of different things coming out of COVID.
Because it's all related, right? The economic sustainability point of view, from a long-term view, if we don't look after our planet, we're not going to have an industry in 20 years. But that whole mentality of feeding into wellness and looking after ourselves and the planet is also going to is now part of the top of our consciousness as well. Peter and Simon, did you want to pick up on that? Peter first, maybe.
Yeah, I'd just say we've seen a lot of evidence of that on conversation on the platforms, both Facebook and Instagram. A lot more people talking about things, and it was natural in the lockdown to talk about these things, but like kitchen gardens, planting their own food, allotments. But what we've seen since lockdown's finished is that the level of those conversations has continued really high compared to where it would have been this time last year. So it's been a significant shift in, as Troy says, wellness, I think, and people thinking about what am I putting in my body, and a big shift towards immunity and how that matters. So when we look at what people, the biggest driver of decisions of where people shop and what they buy, it used to be price, obviously, was number one, and it still is in most markets. But second was safety now, and Troy mentioned that early. But third, interestingly, on this point was transparency. So where is this thing which I'm buying coming from? What's its route to market, etc. And I think that does play in with the sustainable bit. But I think it's beyond just, although climate change is unbelievably important still, and still we've got to focus on that. It feels like, as Troy said, it's more of a wellness, becoming more natural, closer to nature sort of shift that we're seeing. And I guess that's as well, we've seen a big increase in conversation conversions around low alcohol, just as Troy says there. So that's a big shift we're seeing.
Mm-hmm. We've got to leave time just for a couple of Q&As that have come in at the end, which we will answer. But Simon, anything to say on that quickly?
Yeah, just lastly, I mean, just to echo the points that that Pete and Troy have both made, that we've noticed we do our annual touchpoints research, and that runs from January through April. So for this year, we were able to look at pre-lockdown attitudes, and then to look at lockdown attitudes and behaviours changing throughout the lockdown. And there was such a real seismic shift in the way in which people were thinking about organic food products. We saw increases that we really would never have expected. So we saw like a 20% increase in the amount of people eating organic food. And these are things I think that seem to be kind of indicative of long-term changes. And just a thing to say on the kind of the sustainability angle, particularly there seems to be more of an awareness for how companies are acting in relation to sustainability. So people being really increasingly bothered about the amount of packaging that companies are using, how the products are delivered to them. Is it an efficient way for this tiny little thing to be delivered in a box that's 3 feet wide from Amazon with a load of paper, that, those sorts of things. And those are really, really important because they do have a significant impact on the perception of the company that you're buying from. If something comes and it comes in a recycled packaging, it's easy to recycle yourself. It's certainly going to be something that people are aware of. And sustainability, and just as a last thing, sustainability as a corporate initiative needs to be sustainable as well, because it's all very well, we do see a lot of kind of almost faddy sustainability within from some brands, where they'll say, this is what we're currently doing, and then you think 6 months down the line they'll be on something else and they won't have any mention of that, and a lot of that stuff will have gone out the window. But it's really making sure that is maintained and consistent, I think, is important. Great. And one thing that we really haven't got time to go into, but it's worth just mentioning, obviously, the end of the furlough scheme. I think the budget for Office for Budget Responsibility is predicting a trebling of the unemployment rate to 12%, and we've got a bit of a crunch point coming in October with the employment market. So just to really highlight that, really, and I know, Simon, you were obviously talking about, because once you take staff out of the equation, once you make people redundant, which is a huge investment in your business, right, it's incredibly difficult to build that back in. And along the lines of obviously investing in staff, you also have investment in MPD. Simon, you had something to say on that and the importance of maintaining investment in those areas. Yeah. Well, I think it really echoes what Nikki was saying about, if you cut your spend, then your competitors' spend ultimately goes further. And if you're losing kind of the top tier staff, if you're cutting back and thinking, well, let's reduce staffing in this particular area, let's reduce kind of advertising and marketing spend, actually what will likely happen is those people will be snapped up pretty quickly by your competitors. So it's really a case of, well, they're building their army as we're depleting ours. So ultimately, in terms of a long-term strategy, it's not really going to be a good one, because it's, as I said, it's about investing like kind of long-term in the future of the brand, in the future of the company and the business. The last thing you wouldn't, for example, just say, actually, tell you what, customers, go to our competitor because they're going to be able to better serve you at the minute. And that's ultimately what you're doing by cutting those spend or cutting marketing, advertising spend, or even cutting staffing in that regard. So I think it's really important to be aware of that, of the impact of where that could leave you, say, 3, 6, 9 months down the line, and to focus also less on kind of on cost as expenditure, but actually as investment. Yeah. And I think when you shift that in the FD's mind, then suddenly it kind of makes a little bit more sense. It's something that's not necessarily going to give an immediate return, but in the longer term will help the business to return to profitability. And anybody else, do you think we're in for a rude awakening on staffing, or do you think that that companies understand the value of
staff, especially in our industry, where in the hospitality industry, where we know that it's difficult to maintain and keep good and talented and trained staff?
Yeah, if I could interject, I think it is a difficult thing because, I mean, ultimately the demand level is down significantly. So unless you pick up a significant amount of share, you're going to have a lot less sales in the short period if you rely heavily on the hospitality. And I think you'll see a lot of that knocked down. It's interesting for us as we're coming off and adding people back part-time and into the furlough. We're finding a lot of people aren't here. A lot of the Eastern Europeans in the warehouse and some of the other folks, you sort of tap them on the shoulder to say, hey, great news, you're coming back. Oh, by the way, I'm in Hungary and I'm not coming back ever. So I do think that there is a dynamic here on both sides because, not just to have good workers here, but also the knock-on impact economically of people starting to scrimp and not spend as much. And again, you're seeing it with the pret-manger. There's a nice FT article about the pret-manger economy, that everybody would go to the city, they'd grab their coffee, they'd have lunch at pret-manger. They're not doing any of that anymore. Now they're going to spend differently in different places, but the ability to build those kinds of companies and investments is going to shift. And we're basically taking one whole set of the economy down. The question is this going to be replaced by similar kinds of styles of outlets close to where people work, or how is this going to shift? And I think that does provide the opportunity, but I think in the short period, as you mentioned, Joe, I think it is going to be quite a challenge when everybody starts letting people go and there isn't this imminent upsurge in hiring or economic activity immediately. There is going to be a period of time where it is going to be difficult.
Mm-hmm. So I think we're going to end on a couple of questions just very quickly. So Chris Powell, I know you've been waiting for this for a while, so thank you for being patient. I think one for you, Troy. So Chris is asking, how has COVID, the pandemic, shifted wine spend from the on-trade to the off-trade, and how's that changed your business model and marketing strategy? So I know you've been investing quite heavily recently, and you've got the gin foundry and the gin kiosk, which is part of your change model.
Yeah, so I see direct to consumer as obviously an opportunity. I think there's a couple of things that are happening there. The people that buy, I mean, it was interesting after the pandemic when you walked in and people were hoarding toilet paper. If you made it through the toilet paper hoarders to the wine aisle, you would see it completely gone except for 8 pounds plus, right? So anybody 8 pounds plus they're still not going to buy at Asda, and they're looking for other opportunities. And so I do think that there was a great opportunity on the digital side, but also that premium consumer spend. We found a lot of customers, and I think this is where the opportunity, people that had a digital platform already, or people that actively, like Lint did, found a way to get their food into a consumer's hands through Shopify or alternative means. And what we did is we recruited someone that we paid for liquor licenses for some of these folks so that they could, while selling their fruit and veg or their fish or their meat, also have some product, some wine or a gin that would go with it. And it's done quite well. It's not going to replace, obviously, a large hotel chain, but there is enough consistent growth that I don't think these kinds of things are a flash in the pan. And so what we've done is not just try to shift a little bit around, but look for these emerging innovators in direct to consumer on the food side, where food and wine matching for us, or someone, coffee and some of the spirits products are a little bit more important. And I think you will find a number of people out there. It's not going to be all Amazon. There's going to be lots of specialists, particular in our categories. And there's a lot of people out there doing it. And I think it's up to us to go find, and that's what we were trying to do, is to partner with some of these innovators out there in the channel and hope in a few years they are rivaling the size of some of our other customers.
Mm-hmm. And we have one other question here which kind of follows on from that, about the move to online. So someone's asking actually about the future of client wine training. Before lockdown, wine consumers and generics were able to engage with the on-trade and off-trade through product training, masterclasses, or the WSET. So what's the future on training? Is online training here to stay for good? So I think they're saying client wine training, so training of trade customers. Nick, did you have Troy?
Sorry, I'm on the WSET board, and interestingly, so again, they are the world's largest global trainer of wine, and their entire model was bringing people together, and having them spit into buckets in the middle of a pandemic was a pretty difficult proposition. They did an amazing job of quickly transitioning into an online model where people are actually then getting delivered at home, you know, smaller samples so they can do it remotely. And I do think as we move forward, people will find that actually it was pretty cost effective. We used to bring lots of people from around the world and run around and talk to everybody, you know, winemakers, etc. I think there's actually, we found alternative ways that we might be used to now on sort of the wine training, that actually I can have someone sit in Chile and I can actually do a digital training with a lot of people. I know Nick was doing a bit of this as well, so I'm sure he'll want to say something.
Doing long before any of this happened, it's trying to not replace physical training and going into a client site and do a training session of the staff, but it was to augment that. So we launched about a year ago a smartphone app, which, I mean, these things take a while, particularly with limited budgets, and it's always a work in progress, always new things being added to it. But that would give a sommelier, for instance, in hand, all the information they might need to know about one of our, to know something is vegan, for example, or organic, and so someone can literally pull it out their pocket. About it. We're also, in absence of big events, doing a digital portfolio tasting starting next week, which is putting all the information one might need easily browsable online in a smartphone, and then people can, with one click, order samples from us. But I think it's a lot of the trade is going to have to go in for the foreseeable future without the opportunity to be staying in a room spitting into buckets for a while. But it's also something which might give us insights we can learn from and add to the future where we can all congregate in a room. It's something where a lot of clients would complain to us that I can't come to your portfolio tasting in London every year because I'm in Blackburn or I'm in Glasgow, and it's just too much expense for me to come to see you. It's fine if I'm a restaurant owner in Soho, but less so the other side of the country. So we started by doing satellite portfolio tastings around the country. But something like this could mean that you really focus your efforts on but you can still access people around the world. And crucially, as Troy touched on, you can have your winemakers being put front and center of experience without having to travel.
Nick, I think we just about got that. You were having a little bit of trouble, but I think we got that. There are some more questions, but I think we have run out of time. So what I'm going to do, if anybody whose question hasn't been answered, I've copied them, but if you could also email me at joe.gilbert@agilemedia.co.uk, I'll try and get those questions answered with the panelists, if you don't mind, panelists. Any quick closing statements on those final things, Nikki, Simon, Peter, anything that you're burning to say? Shaking heads. Okay, well, in that case, thank you all so much for joining us. We will put this on the Harpers homepage, but it's been such an interesting conversation. I think, you know, some of the takeaway from that is that we really can't ignore things like the environmental and economic sustainability is really tied together now, and it's really the investment in those things and in marketing, consistent marketing spend, and keeping a brand presence with consumers is really, really important. So it should be an interesting end to the year. I wish you all very well, and thank you for joining us.
Thank you.
Bye everybody, we'll catch you all soon. Thank you, panelists. Thank you. Bye Nikki.
Bye.
Bye Peter. Bye Simon.